So here we are with part 3 in our series, The Figures of Property. My name is Jeff Banks, I'm from Property Portfolio Solutions, and as I've said previously in the other 2 sections, that the Henry Blake Figure A and Figure B in that hilarious MASH episode where he's trying to do the sex education talk is the inspiration behind what we're aiming to do here. In previous sessions we've talked about Figure A, the principal place of residence. We've talked about Figure B, the investment property, where investment's defined as we do at Property Portfolio Solutions. And then today we're going to do about Figure C, the developer property, the property that we've effectively traded in like a grocer trades in apples. Here, property transactions will take potentially a lot longer than what a normal trading transaction might take. But if it quacks and it waddles and it swims like a duck, then I'm sorry, it is a duck. It doesn't matter if this takes 10 years to happen. If the taxman takes the look at it and says that you have effectively created a business and you're doing a business, then the benefit of capital gains tax from investment does not apply. And we need to then be careful that we have made sure that we understand that and have cash flow for it. The other thing we probably should look at is the quarantine of risk. Developing properties can be risky. Investing in properties can be risky. Owning our own home is a dream which carries its own risk, but because of the taxation benefits of principal place of residence, we always own that in our own names. Down here, investing in property. So if we buy a block of land, cut it into, put a duplex on it, as was our want at Property Portfolio Solutions from time to time, and then we sell them, my suggestion is that that looks and quacks like a duck, and that duck is a trader, and therefore capital gains tax doesn't apply. GST does, so GST on the purchases of the block of land will be claimable. The GST on the building costs will be claimable. The holding costs that we incur before we start receiving rent or we sell it will become part of the cost base. Not so much deductible at the time in which we pay it, but deductible against the sale when we sell it. Very important point to think about. Here, we are looking at things that can make it look like we are trading. So we can actually make this look like we're trading. All we need to do is, if we're living on a big block, we cut it in half and flog off a block. There's a suggestion that we've potentially traded because we've created a new asset, that back half, and if we've sold it inside 12 months, one might suggest that it's a realisation of an asset and therefore capital gains tax applies, or because the legislation or the capital gains tax legislation talks about 12 months, we may very well have to pay tax on the difference between what the value of that property was before we cut it in two and what we sold it off for. Attract the young players. Here, capital gains tax and revenue tax and GST can be really blurred if we buy something and sell something inside 12 months, or if we build it and sell it inside 5 years. There's all sorts of things that could potentially happen. So down here, capital gains tax doesn't apply, it's all about the revenue tax. So we look at potentially using maybe a company where the tax rate's 25% as opposed to the marginal rate at personal levels, which is 47%, and then deferring the extra tax that we might have to pay through the dividend system until such time as we might have a lower income down the track, or we liquidate the company, whatever. Again, they're conversations for you to have with your accountant, financial planner and your other advisors. I know when I talk to my clients, and I have a small accounting practice as well as what I do for Property Portfolio Solutions, we sit down a long time before anything's ever done, a deposit's put on a property or anything like that, to work out A, which entity we're going to do it in, B, what we're aiming to do with that property. So we're going to quarantine the costs, or we're going to claim the GST, or those sorts of things. And C, understand where that particular transaction fits in our journey towards our financial freedom. For us, it's a holistic approach. It's a matter of, if we're talking to a client, we might very well be looking at all 3 of those options here. They might very well be living in a unit in the city for the moment, but their retirement dream is to live on acreage out in the country. They might need to have a passive income, so we look to building up investment assets. They might need a deposit to help them get to something that they want to get here. So building and developing and creating a deposit, paying the tax, taking the money out in dividends, getting to a point where we've got the deposit may be the way. But the stepping stones on that journey is not just the property itself. The stepping stones is the understanding of where that step fits in the journey towards your financial freedom. My name's Jeff Banks. I'm from Property Portfolio Solutions, where your legacy is our inspiration. And your legacy doesn't come with one transaction. It comes with the culmination of a journey to where you want to go.